It's 2.5. What was our share capital? 6,250,000. We issued additional shares. How many shares did we issue? 200,000. What price? That's 350 cents, which will give us 700,000. And then what happened thereafter? We issued 300,000 more shares. At what price? There was no price, but you were given 1.2. So how did I get 4 rand, guys? So it's 1.2 divided by 300,000. That's how I got that 4 rand. How many shares? What happened thereafter, guys? How many shares did we buy back? 60,000. We're going to put that in brackets, right? We'll have 60,000. What will be the buyback price here? No. What am I going to put in here? The one that you're talking about is the buyback price, but I'm simply looking for another price. Which price normally comes here? The original price. What is the original price in this case? How do you calculate it? Thank you. You just add these ones and divide it by those ones added as well. How much do you get? Above. But that really doesn't matter. What matters is what comes here. I said what comes here. Is there average price per share all the time. In your ordinary share capital note, you only bring the average price per share. You said it's how much? 2.72. That's what you will have. So we don't add the 0.7. No, we're just interested in the average price. Remember I said in your ordinary share capital, your shares will increase at the original price and they will decrease at the original price. But I said to you, because those shares that you issued them at different prices. This is a good example. These shares were issued at 350 and these ones were issued at how much? At 4 rand. So when we buy them back, we're gonna reduce them at their original price. But what is the original price since they were issued at different prices? But what is it? In mathematically, I said the original price will always be the mean, which is the average. That is why you have to add the total share capital divided by the total number of shares that you have issued, and then you will get that 2.72 rand, and multiply that 2.72 rand by 60,000 rand, you will get 163,200. You put it in brackets. Why do I put it in brackets again? Because the number of shares issued will decrease. Alright? At the end of the year, number of shares issued will be 2,940,000 and our share capital will simply be 7,986,800. Is everything correct? Alright guys, let's just check this out. What are we going to start with? How much is the balance? That is correct. Your balance here will simply be 2,550,000. What's next? Profit after tax. And your profit after tax, you were given income tax for the year. they gave you income tax for the year, which is already at 28%. Profit after tax is at what percentage? Talk to me, please. It'll be at 72. So you will multiply by 72 and divide by 28. And hence you will have here 490,000 multiplied by 72 divided by 28, and it'll give you your net profit after tax of 1,260,000. What's next? What's next, guys? Buyback. Loss due to buyback. That's where it comes in. Remo, this is where that 0.72 comes in. Understand, 0.72, they're simply saying that our share price is here, but we bought it back at a price higher than the average price. So whenever we buy back shares at a price higher than the average price, it means we made a loss. And what is the difference between the buyback price and the average price? It is that 0.78. Hence, you will simply take the 60,000 Rand and multiply it by 0.78. It will give you 46,800, but you put it in brackets because it is a loss. The next thing will be dividends on ordinary shares. What did I say dividends on ordinary shares is? What is dividends on ordinary shares? What is it, guys? Which dividends will those be? It is interim and final. So that's what we're going to do. We're going to take your interim dividends. Interim dividends, we declare them and we pay them during the year. For you to calculate your interim dividends, I said to you guys, you cannot calculate your dividends unless you draw a timeline where you specify the beginning of the financial year as well as the end of the financial year. At the beginning of the financial year, we had 2,500,000 shares issued. What's next? 30th of May, we issued more shares, right? And we issued 200 shares. How many shares have we issued in total on the 30th of May? We have issued 2,700,000 shares. But then when did we declare dividends? 30th of June. Meaning that on the 30th of June, how many shares would we have issued in total? It is 2,700,000. So you're going to just take that 2,700,000 and multiply it by your interim dividends rate. And your interim dividends rate here was how much? 60 divided by 100. It'll give you 1,620,000, and that will be your interim dividends, which is simply your 1,620,000 rand. Easy. Peasy. Sneezy. I'm rhyming, guys. We're supposed to. Your final dividends. This is how you're going to calculate them. When were the final dividends declared? When were the final dividends declared? 20th of the 1st of Feb, right? Or it was the 28th of Feb. But they did not qualify. So basically, someone is being petty there. Who's being petty? The company is being petty. Those people do qualify for final dividends. Why? They have been waiting for the whole year. So why can't we give them? Correct. I'm just going to repeat what I've said then. 60,000 shares, they do not qualify for final dividends. Are we all together? Before those people bought back their shares, before we bought back shares from those people, how many shares did we have issued? It was 3 million. We just take out there 60,000. You'll be left with 2,940,000. Take that 2,940,000 and multiply it by the final dividend rate of 45 cents. And it'll give you how much? It'll simply give you 1,323,000. You add the two, it gives you your total dividends, everything in brackets, you subtract, and then you will get your final amount of 820,200. And Milena said something. These final dividends here, where else must they go? They go to trade and other payables. Why? Because they haven't been paid. They represent a current liability. Excuse me. We call it shareholders for dividends. In trade and other payables, we will call it shareholders for dividends. I will send you guys another activity which will be similar to this one, okay? Enjoy the rest of your day and enjoy short-term break. It's a very short break, eh? Like 2 days.